For more exclusive content from CNBC Crypto Trader, hit the subscribe button now.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
This week's edition of Crypto Trader starts right now. I'm Crypto Man Run, and with me in the Tel Aviv studio, I've got some of the biggest names in crypto Israel. I've got Moshe Chogeg, CEO of Sirin Labs, Daniel Pellet, CEO of Orbs, Yoni Assia, founder and CEO of eToro, and Yaniv Feldman, CEO of One Alpha. Tonight on Crypto Trader, we're going to be looking at the stories that made crypto news headlines. 3 weeks away from the end of September, what will the SEC decision be around the proposed VanEck ETF? And when can we expect to hear about the 9 ETFs where the decision was recalled? Tonight, we speak directly to the SEC. The SEC is considering a revamp of the accredited investor laws. What does this mean for crypto? ICO funding in August increases to over $500 million, but should we be bullish just yet? We look at the future of Ethereum against the background of a depressed ICO market and an imminent futures launch. Bitcoin battling the key $7,000 level. Is the worst over yet? We take a look at the charts to see if there are any hidden clues. This is a show you don't want to miss, so stay tuned. 3 weeks ago, the SEC rejected 9 proposals for Bitcoin ETFs that were based on a Bitcoin futures market. But then in a surprise move, they recalled the decision for further review. There's also one particular Bitcoin ETF application with the SEC that's got the crypto community in high hopes, and that's the VanEck ETF decision due at the end of September. With me on the line to give us some clarity and insight as to what's going on behind the scenes at the SEC, I've got Commissioner Hester Peirce. Hester, good evening. Thank you for coming on Crypto Trader. Sometimes we think that all you guys do at the SEC is review Bitcoin ETF proposals. How busy is the Bitcoin ETF keeping you guys?
Well, that's actually just one of a lot of issues on our plate. And so it has been something that's taken a fair amount of staff time recently, but we actually have a wide array of issues that we're looking at, crypto and non-crypto issues.
Hester, the 9 denials that came from the SEC for the ETFs that were based on the futures, not the spot market, were later recalled. Give us some clarity as to what actually happened behind the scenes on this one.
So what normally happens with these rule filings that exchanges file, which is how this was being considered, is that the staff will act on delegated authority. And then the SEC, the commission, which is the 5 of us, and now in the current status, it's 4 of us, can decide to pull up a decision that the staff made and to reconsider it at the commission level. And so that's what happened here.
Now, is it normal for the SEC to issue a denial and then to recall it, or is that something that fell through the cracks?
No, that's a normal, I mean, it's fairly standard for these things to go by delegated authority and to just be final. But it's not unusual because there's a period of time within which the commission can recall it, or one of the parties could have recalled it also. Called it up for commission consideration. And so that's what happened here.
So Hester, what's happening in the background now that these ETFs have been recalled and there's one big decision due at the end of September, which is the VanEck ETF? What work is actually happening in the background?
So the staff is working on a plan to figure out how the reconsideration will happen. And so there's no definitive timeline. I mean, I think that's an important thing for people to understand. There's no definite timeline, and there's no definite outcome of what could happen after the reconsideration. So, people can't count down to when there'll be a decision because it's pretty open-ended at this point.
When you say open-ended, there was an extension until the end of September. Is that not a kind of a deadline?
You mean for the other proposal under consideration?
Yes, the VanEck one.
Yeah, for the VanEck one, that's separate. So the indefinite timeline is for the ones that got recalled.
Okay, now let's talk about the VanEck decision that's due at the end of September, the one that the whole crypto world is looking out for. What is actually happening behind the scenes on this one?
Well, so again, because that is ongoing, I really can't talk about that one. in the sense of where that one stands. But as with other rule filings of this type, the staff is doing a lot of work to consider the facts and circumstances of the rule filing.
And will they then bring it up to the commission for a vote?
Well, again, I mean, the staff has delegated authority in this area, so they can do a lot in this area without direct commission input.
That's Hester Peirce, and she isn't giving too much information away, though it does seem that we will get some news pretty soon. Gentlemen, how important is this Bitcoin ETF?
I think that the Bitcoin ETF in general is sort of more of a signal to what the industry is hoping to happen. I think that people are looking at the ETF more as an agreement of the SEC for Bitcoin to be something regulated or something that they can regulate, so that people who are afraid of what's going to happen will be able to invest much more safely, I would say.
So what you're saying is they're going to legitimize the asset by doing an ETF. But is the ETF market so big? I mean, when we get an ETF decision, does this mean that we're going to then get this bull market back?
I don't think the ETF will have a significant impact on the actual holding in the market in the short term. So the signal is important. It legitimizes Bitcoin. But if you think of gold ETFs, if I'm not mistaken, it's around $100 billion, and it took more than 10 years to get there. So we can expect probably less than $1 billion in the Bitcoin ETF in the first 6 to 12 months, which is not that significant to the market. I also think that what we really want to see is people holding Bitcoins and understanding how to hold Bitcoins and how to transfer Bitcoins. And I think the real change in the market is when we'll see institutional investors being able to actually hold crypto assets, hold Bitcoins, and actually custody them or with a third-party custody rather than going through the traditional infrastructure markets.
But isn't that a requirement for an ETF, is that the underlying asset actually gets held somewhere? Is that not the difference between an ETF and, say, a futures product?
Definitely there are ETFs that are holding the underlying asset and some others are holding future. They have to have it backed. But I think that's an interesting point that has been raised is regarding the security of digital asset. A lot of people within the ecosystem think that because you can hold the private key, you can become your own bank. And I don't necessarily agree with that because it's very hard from a security perspective to secure digital asset. Most of them over the years have been stolen. If I have a heart issue, I will go to the doctor. I will not try to operate on myself. And the same thing for big amounts of funds. I would want it to be secured by somebody that is professional. So I do think that for mainstream adoption, we do need to see such instruments, or we need to see real custodial solutions and that institutions can join in, and also the mainstream. There is a reason why one of the fastest growing companies in the space is Coinbase, because they help you buy and sell digital asset, but they're also the custodian. And that's really what a lot of mainstreams are looking for.
Now this brings us into discussion around institutional money coming into crypto. And I think the hope from the crypto community is that the ETF is the bridge for institutions to bring money into crypto. Is institutional money actually in crypto at the moment?
I don't think that any kind of significant percentage of institutional money is in crypto right now. I'm agreeing with Yaniv that this signal of legitimizing Bitcoin is very important from psychology side of perspective, okay? Because then you have a rainbow of private equities, hedge funds, pension funds even, that can take a small, tiny portion of their portfolio and put it into crypto. Then with the growth of user experience, different applications, then we will see the mass market joining us. But institutionals should be the first step, and ETF should be the first step for them.
So in order to launch an ETF, do we not need to have custodian solutions actually ready? I mean, if you're going to have an ETF and it means that institutions or funds must now hold the underlying asset that the ETF is backed by, should we not have custodian solutions ready for that?
I think there are a good custodian solution. If you look at Coinbase hasn't been hacked since they were established. If you look at Bittrex, they've never been hacked. So I think there is a good technology solution for experts, and ETF can supply that for the mainstream. Regarding what Moshe said, I definitely think that 2018, the growth was about retail, and now the price fixated. So the next round, I do think the institutional are very important. The smart money, Wall Street, there's a lot of funds being held by very big entities. And I do think they want exposure to this asset class. I've been telling my friends and people, whoever wants to hear, I think it's totally rational to have 1 or 2% of your portfolio, saving portfolio, in digital asset. It's the best performing asset class in the last 8 years, Bitcoin in the last 4 years, Ethereum. And if you have a saving portfolio and you need to diversify it, because if fiat currency is inflationary, you're losing buying power, doing it in gold, in real estate, in the stock market, you should definitely have 1-2% in this new asset class that is the fastest growing. And they want exposure.
And you apply that obviously to institutions as well. You're kind of saying, look, institutions, if you want to deploy a responsible approach, start having 1 to 2% of your assets in crypto. Gentlemen, are we going to get an ETF before the end of the year?
I assume not, unfortunately, because I don't think that the industry is ready for that in terms of both custodian solutions. I think there are, but they're not, in the institutional level. In addition to that, a lot of the comments that the SEC had when they declined previous ETFs were about market manipulation in unregulated markets. And the fact that a lot of the volume is still right now in unregulated markets, we are witnessing every day wash trading and market manipulation that affect the price, even in so-called regulated markets. And that's a problem. When you want to regulate an asset, you want it to be safe for consumer usage. That's a problem. Even though that in the traditional markets, it's just the same. It's just that in the traditional markets, people do it under the table, and in crypto, they're doing over.
So, Yaniv, if you remember the Hester Peirce dissent that she published, she said that the SEC has no jurisdiction to look at the underlying asset, but only to look at market manipulation in the actual ETF. And she said that if gold or oil were applied the same test as they applied to Bitcoin, both gold and oil would fail. Yoni, are we getting an ETF before the end of the year?
Well, speculating on regulators' decisions is as bad as speculating on the price of Bitcoin. In the long term, we'll see a Bitcoin ETF. Whether it's this year or next year, nobody really knows.
Daniel?
Yeah, I also think definitely that it will take a little bit more time, but we will get there, and I think it will be positive for the ecosystem, and it will bring more people involved. I think right now it's still too soon because there are questions that applying it on digital asset is difficulty. For example, in a case of a fork, what happened? How do you value the asset? In case of custodianship, what are the guidelines? Nobody wants to insure digital assets at the moment, so I think it will take some more time.
There are some insurance already
just
for digital assets, so we've seen that progress. There's been a couple of news.
Just last week, there was an announcement that in the Lloyd's insurance market, there were a few companies willing to insure both custodians and exchanges in crypto assets. So it is warming up, but like you said, it will take a little while longer.
I would add one thing about that. One thing about this, in the end, the SEC can't tell accredited investors what to do with their money. And that's a big problem if they do that. So I think in the long term, there's no question about whether it's going to happen or not.
Now, speaking of the SEC and accredited investors, the SEC is considering a radical revamp to the US investor accreditation laws. The changes are set to make the market more inclusive and to bring more investments to the man in the street. SEC Chairman Jay Clayton said this week, the private markets are awash with capital these days. The question is, who is participating? The new proposal paves the way for mainstream investment into private companies and could bode well for both crypto and blockchain securities. To help make sense of this all, I've got Hester Peirce on the line once again. Hester, thank you for staying on the line with us. Hester, Commissioner Peirce, Chairman Clayton came out this week with some really strong statements around accredited investor laws. What is the SEC thinking around that?
Well, I can't really speak to what my fellow commissioners think about that topic. I will say that I think it's an area where the accredited investor standard has served to prevent a lot of people from investing in certain segments of the market. And so I think that I would like to see it broadened so that more people could invest in more types of investments. I don't actually think there's a good reason to have an accredited investor standard at all, but I'm also a realist. And so given that we're going to have an accredited investor standard of some kind, I think we need to take another look at it and see whether it properly encompasses the full range of investors who should be able to invest in private offerings. And so, some people have suggested, for example, a sophistication test. Right now, we sort of use money and income, wealth and income as a proxy for sophistication, but there may be better proxies or additional proxies that we could add. And so I think that's where some of the thinking on the outside has been, and I would suspect that would be the type of thing that folks here would be amenable to looking at.
Hester, you mentioned that you don't believe that the USA should have accredited investor laws, but the SEC has a mandate to protect the man in the street who may not be as astute as some of these accredited investors. Don't you think that if the SEC stops with these accredited investor laws, some investors may make decisions that may come back to haunt them?
Well, I think that's, there is a real value to having freedom of choice to make your own decisions. And that's sort of a fundamental principle of what our country operates on, which is that people can make decisions and act in ways that they think are wise for their own lives. It's very difficult for me as a regulator to know what might work for an investor out in the middle of the country. I think, well, I can make a better decision than someone in the middle of the country. That's ridiculous. That person knows her own life better. She knows her own resources better than I do. She knows her own limitations better than I do. And so I think it's really presumptuous of me as a regulator to come in and say, well, I've decided that you're not smart enough to invest in this particular type of investment. I would rather have a system where we let people choose. Do they want to be in a protected category of investments, or would they rather have full access to all kinds of investments? I realize that kind of thinking is a little bit atypical for a regulator, but I do think that investor protection encompasses this idea of choice, letting people have access to products that they want to have access to, and not trying to second guess or replace their judgment with my own.
Now, in that spirit, should this not be applied to Bitcoin and cryptocurrencies? Should investors not have the right and the freedom to decide for themselves around investing in a Bitcoin ETF?
Right. Well, I mean, I sort of have the view across the board that people are able to make decisions for themselves, and they are responsible for those decisions, and we should encourage them to do a lot of research, to ask a lot of questions, to be skeptical investors, to be smart investors, educated investors. But I am very confident in people's ability to make decisions for themselves, whether it's in the crypto space or it's in whether or not to invest in a small retail store in their hometown. I think people really have a fundamental right to spend their money the way they want to spend their money.
Hester Peirce, it's always a great pleasure having you. Thank you so much for coming on Crypto Trader. Up next, I've got Anthony Pompliano to talk to us about the proposed implications of these amendments. And so good to have you back on the show all the way from Virginia. What do you make of this news from the SEC?
Yeah, look, thanks for having me. I think the SEC is trying to do their job, right? They're trying to increase the access that retail investors have to the private market, while also providing the protections that they're mandated to provide from an SEC perspective.
But what does this actually mean? What are the implications of if such an amendment is passed? What are the actual implications? I mean, can we expect to see more fraud? What are the other implications?
Yeah, I think there's two key pieces. So one is we have to remember that the accreditation laws are literally the rich get richer written into law, right? In my opinion, these are laws that use wealth as a signal for intelligence. And so we've got to move away from that model into something that's more education or knowledge-based, right? So one that would allow anyone the opportunity to participate in these investment opportunities as long as they had the right knowledge. And I think, two, is what you're going to see is in that model, you would see a much more sophisticated investor base. You'd see a more robust capital inflow to the market. And, of course, you're also going to get plenty of kind of fraudulent activity. But the SEC is well equipped to kind of identify that stuff and ultimately enforce on it. And so I think it's a net good. And we'll have some kind of rocky, ups and downs in the beginning. But ultimately, we should allow individuals to invest in the private market opportunities that have proven to be the highest returning asset classes over a long period of time.
And were you surprised from these comments, or were you surprised by these comments by SEC Commissioner Jay Clayton?
Look, I frankly, I'm not very surprised in the sense of if you really think about philosophically what's happening here, right? The United States is the land of the American dream. So people around the world can come to the United States, and anyone, regardless of your nationality, your language, et cetera, have the opportunity to build wealth and build a life of, kind of happiness, et cetera. Well, these accreditation laws are preventing people from doing that. Unless you have a certain degree of wealth, you're not allowed to participate in this wealth creation asset class. And so I think that, it's about time we get rid of these things, and to see the SEC kind of publicly making this stance is not only, one, encouraging, but two, it gives me quite a positive sense that, we'll actually see change here.
Now, what does this mean for the current crypto market?
Yeah, look, I tend to think that the crypto market's going to follow the traditional market, right? I don't know if I necessarily agree with people who are saying that these changes are driven by kind of the ICO boom, as much as I think that this has to change on the traditional financial markets. And then once that happens, obviously the crypto projects will figure out how to raise capital in a regulatory compliant way. We saw the ICOs kind of do all kinds of crazy stuff through 2017. And here in 18, I think we're seeing many more kind of Reg D type filings. And so once the SEC establishes what the rules of the sandbox are, I think the crypto projects will figure out how to be successful in that sandbox.
And is the SEC paving the way for a new kind of asset, and namely the security token that's coming out now?
Yeah, listen, as my partner Mark Yusko says, there's only 4 assets you can own: stocks, bonds, currencies, and commodities. And so I think that rather than them creating a new asset class, they're merely allowing more participation in the existing asset classes.
Anthony Pompliano, it's always a pleasure to have you on Crypto Trader. Gentlemen, how important is this decision from the SEC?
So first of all, I think it's great that people have more choice. I think they work hard, they earn it, and they can spend it on what they think is a good opportunity. But I do have to raise that investment in general is not easy. Venture capital, professionals that do it, the results are very bad. If you read the Kaufman Foundation report, funds on funds, investing in the best funds in the world over the last 25 years, they analyze why the returns are so bad. Traditional venture capitals are not giving the 3.4x over the 10 years or the 10% IRR annually. Only the top 5% are doing it. 1% of venture-backed startups actually succeed in the long term. And in the crypto space, I can assure you that much less than 1% are going to succeed. The money is easier, the governance is much lower, and the technology is very immature. So I tell people, obviously, it's your choice, and it's great that you have that ability, but be very aware of what you're investing at, and don't invest more than you can afford to lose, obviously.
Now, Yoni, you deal with investors all day long. I mean, that's your line of business. What does this decision actually mean?
I think generally it's a decision really updating rules to something that hasn't been updated for a while. And I think it's important because that signal of the capability or professionalism of an investor based only on their wealth is not sufficient alone. If you look historically, what is this for? This is for private companies or even sort of investments in real estate that are grouped, etc. Now, traditionally, these were minimum $25,000. So they said, okay, you need to be rich enough in order to make decisions on these big sums. But now with the internet, suddenly, you can suddenly put $50, $100, $500 in projects that are considered still private securities, and therefore they're not accessible to private individuals who are not accredited. So in general, I think the concept of just updating the rules and making it more accessible very much fits with the internet and the fact that there's more access to information, more access to investments, and enabling more people to invest in the private markets.
Yoni, any implications for crypto?
I don't know. I think that what Yoni talked about was pretty much Title III of the Jobs Act, and that changed a lot for equity crowdfunding. And I think that it opened up a lot of people that weren't open towards investing. And I think that in crypto specifically, once the boom started, which was around mid last year, a lot of the people that heard about crypto were already aware of the possibility of investing in stuff that are not the same. So I think that definitely it's going to be interesting, and if the accreditation rules or the accreditation level will go lower, it will bring in new capital, not necessarily smart ones, which will probably have devastating consequences.
It's important to note that the concept, again, this is not a legal analysis, but of security tokens, right? So if a security token is a private company, right, which most of them will be, not the ones representing public ones, then a retail investor can't invest in security tokens. So updating these rules potentially actually opens the security token market in the US.
Well, that's why I was asking whether this is actually paving the way to say, we know this new thing called the securities token is coming out. Our laws don't cater for it, so we have to come up with a new decision.
But the question is, once a lot of the security tokens they're getting issued on, chains like Swarm or Harbor or all these other guys will be traded. And the question is, when they're traded, are they public or not? And if they are, do they need to stand by public regulation or private?
So again, it's different. If they're not public, at least right now, it would be a closed system only for accredited investors. So if you look at a lot of the progress right now in tokenized securities, most platforms open up only for accredited investors.
Right now.
Now that might not change, but if you lower the threshold of accredited investors, or maybe make it based on knowledge as well, then suddenly you basically bring many more people into the tokenized security markets in the US.
After the break, we're going to be taking a look at ICO funding for the month of August.
You are a trading master. You see trading opportunities where others see coincidences. Charts and patterns are everywhere. You can run with the bulls or be at one with the bears. So, don't waste another pip and take your talents to eToro. See why so many top traders choose us as their main trading platform. Start trading on eToro today.
ICO funding is on the uptick once again with over $500 million raised in August. This after the funding reached a low in July of $417 million. Though these numbers may look encouraging at face value, a closer look reveals that the numbers in August included $100 million for the Hashgraph raise and $134 million for the T0 raise. Still, the numbers for 2018 are sitting at around $11.5 billion raised in ICOs as compared to only $6.5 billion raised in 2017. The tough markets have caused a flight back into Bitcoin, sending the Bitcoin dominance to over 53%, and this has raised concerns around the long-term viability of the Ethereum network, which has positioned itself as a platform for raising money for ICOs. Now, gentlemen, I'm going to look at you for this discussion, because between the two of you, you probably represent over 60% of the crypto GDP in Israel.
In Israel, yeah.
So let's talk about, first of all, there's two discussions here. The one discussion is around ICOs. Is the ICO market, the utility token market, dead?
No. You want to start?
Go ahead.
I think it's definitely not dead, but it's definitely...
On life support.
Yeah, on life support. Let's see what happened. This is very important, Mid-17 started the uprise. A lot of ICOs raised a lot of money, but then what? Then a lot of excitement from the retail investors, but all of those projects need to pay salaries. So what did they do? They converted most of the Ethereum and Bitcoins back to fiat money, actually supporting the industry, but fighting it at the same time without understanding. But this is what happens. Market started to go down. A lot of people lost a lot of money. But right now, what we see, what I feel we see, is that most of those projects invested their money in creating value. And this value now is starting to float. And I feel that actually right now, when everyone is running away from this market, is actually the best time to join the market just because of the value creation that all of those ICOs created in the last year.
Now, when you say the value creation, are you talking about ETH or are you talking about utility tokens?
No, I'm talking about utility tokens, and I'm talking about different companies. You spoke about security tokens before. We got to understand utility tokens are an invention that happened because security tokens regulation wasn't exactly the right place. I feel that in the future we'll see much more security tokens than utility tokens. But again, when you look at those two things, that ICO sold, but now the creation is floating. If you look at Daniel project, Orbs is going to be live soon. My project, Siren, is going to be live soon. There's so many different projects that are going to launch in this year, and you're going to see all of the money that was raised coming back to us.
Now, let's talk about Siren, and we'll get to you in a second. You guys raised a lot of money in Siren Labs, and I'm assuming that you raised the money mainly in Bitcoin and in ETH.
Yeah.
But you've got a runway in US dollars. Your advertising costs and your product development costs are in US dollars.
Yeah.
Does that mean that you are releasing ETH into the market now at $250?
Yes, it is.
Which means that you're part of the problem in pushing the prices down.
100%.
Yeah.
Yeah, that's what I said before. We need to pay salaries. We need to pay suppliers. But this money doesn't go out of the market. It goes back into the market by creating value. Once our product is going to be, by the way, it's not such a long time. We're talking
long
about
term, I said.
Oh,
Long term.
yeah, also long term. 6 months became super long term. 1 year it looks like the future in crypto space, right? But in the next 3 months, we're going to launch our phone, and you're going to see all of those dollars that we converted from ETH to fiat back into our token.
Moshe, the raise that you guys did was over $100 million.
Yeah.
What was the ETH price when you guys locked your raise?
It was 700.
So theoretically, you have 30% of your money left.
Yes, you're right. Luckily, we sold some of it during this year. This question is in place. You know, Daniel project raised over 100 million. There's many other projects that raised over 100 million. I hope that some of them, that all of them, at least took half of the money to fiat. Otherwise, they're jeopardizing the project. And the rest of them, yes, they lost a lot of money.
Daniel, the utility market, are you still bullish?
That's a great question. I must confess that in 2018, I don't think really there were too many utility tokens out there in the market for two reasons. One, I think the infrastructure layer is still very immature. There is a reason why there's 3,000 dApps on top of Ethereum. Nobody is driving transaction. Nobody is driving usability. CryptoKitties is about 150 daily users. Augur is about 60 daily users. And the reason is because the infrastructure layer, the L1, is still very immature. And I think 2019, the focus will be to build the third generation blockchain, the L2, the production layer on top of the L1, the liquidity trust layer. So solving problems such as scalability and update models and governance and privacy. These are very important things before we can actually see any utility tokens. Secondly, there was obviously a lot of hype in 2018. I can assure you that even if I take one of the best projects, I think, out there, Telegram, 200 million users, amazing execution. All the ecosystem is built on top of them. Amazing track record, amazing technology. But if you ask a normal person, why did they buy more than $10,000 worth of Ethereum token, worth of Telegram tokens, and I bought much more, I'm not sure they will tell you because of the services that Telegram will provide you. I'm not even sure yet what these services will be. So utility tokens, I think for most project out there, is not really the case. I do believe in utility tokens for blockchain and infrastructure that pay for the security and the distributed consensus.
Now, Yaniv, I'm going to look at you because you sent me an article last night about that was written in TechCrunch about the future of Ethereum and alluding to the fact that the Ethereum network is doomed because the ICO market is dead. Do you believe that that's the case?
So first off, the article was written by a guy who is an advisor to Stellar, so everything needs to be taken under consideration. But I do think that Ether has some fundamental problems in the way it uses ETH as gas, like Vitalik also mentioned. But I don't think that specifically signals the end of utilities.
Well, I gotta say something about Ethereum. Let's remember, EOS raised $4 billion in ETH, and they're competing with Ethereum. So again, they're converting the Ether into fiat money, damaging their competitor, and taking this money and creating value at the EOS. I think that I think Ether is here to stay, but EOS and Cardano are a very good competition to them. So Bitcoin has its own special place, but then when you look at the smart contracts, then you have Cardano, you have EOS, you have Orbs, and other projects that are all competing on the same space.
Again, infrastructure.
Yeah, but I don't think it's exactly the same space. If you look at it, I don't think there will be one blockchain to rule them all, because at the end of the day, the architecture is a matter of trade-offs. Do you want to be more secure, more decentralized, or do you want to be faster? And usually it's smaller nodes and more centralized. Do you want to be more compliant? Do you want to be more anonymous? I don't think Ether is better than Ripple, or Ripple is better than Ether. It's just completely different use cases. So the future I see is actually projects or applications using multiple blockchains for different things and different strengths. And that will happen in 2019. Orbs is building a hybrid distributed blockchain, so you have a very fast accounting layer for storage and smart contract and CPU, but we do the settlement on top of Ethereum because that's the best liquidity and most decentralized ERC20 assets right now. So I think the connection between blockchains, as real startups today use multiple languages for their development stack, that is what is going to happen.
I think I'm still bullish on Ethereum. I think.
Are you bullish because you have to be, or because?
Probably both, because I have some, but I think generally it's by far the most used smart contract platform, by far.
Used for what?
Used for everything. So all of the 1,000, 2,000 companies that did ICOs, most of them did it on Ethereum and are developing stuff on Ethereum. Most of them.
Hold on, Moshe, you disagree here. You disagree here.
No, I completely agree. 99
does like this when he agrees.
99% of them are using Ethereum. You know?
And they're building stuff on Ethereum. We're gonna see apps on Ethereum. I think the biggest problem in the ICO market is the moral hazard. People who raised money, are they actually going to deliver? So it's moral hazard and execution, right? But even if 10% of them execute, so think about it. Everything, in my opinion, we saw in 2017, everything we saw is one killer app, 100 lines of code. The ICO smart contract. That's it. That's one killer app. Now there's 1,500 companies trying to find another killer app. I think we're going to see another couple of killer apps in the next 6, 12 months. We're going to see them first on Ethereum. Ethereum has its own issues, mostly fees and scalability. But the first next killer apps, in my opinion, we're going to see them on Ethereum, which is why I'm generally bullish, again, in general, on the future of smart contracts.
Now,
I think also I'm very bullish on Ethereum, but I don't think actually Ethereum needs to be the production layer for dApps. There is a trade-off there. If Ethereum stays as a very...
You're conflicted. You're building your own blockchain.
No, not because of that. I think we're driving the Ethereum ecosystem because we're enabling dApps on top of Ethereum to scale regarding their usability, while they're still ERC20 tokens. So I think we're part of the Ethereum ecosystem. We're trying to work much closer with consensus. So I'm very bullish on Ethereum because I think the L1, the trust layer, the liquidity layer, they will become very powerful. And if you look at the design of Plasma or Plasma Cash, is to having a dispute resolutions between the L2 and the L1 that gives a lot of strength to the L1 infrastructure. So Bitcoin and Ethereum, they're the most established liquidity and trust layer. I think they will still keep growing very quickly. And obviously consensus is driving the Ethereum ecosystem amazingly. 1,000 people, 28 countries. You can't ignore that.
Now, Jimmy Song took a bet, or tried to take a bet with Joe Lubin from the Ethereum Foundation around whether there was going to be 10,000 daily users, active daily users on any dApp in the next 5 years, and 100,000 in a month. Would you take that bet with Jimmy Song?
Yeah, I definitely think there will be more than 10,000.
So you're willing to take the bet with Jimmy Song?
Yes.
Moshe, would you take that bet?
I would take the bet, yeah.
You're saying there will be at least 5 dApps that will have 10,000 active daily users and 100,000 monthly users, built on a decentralized blockchain that is Ethereum?
In the next
5 years.
100%.
So you're willing to take the bet?
I'll take the bet.
Yaniv, would you take the bet with Jimmy Song?
I will join Jimmy Song, not take the bet.
We can bet now. I'm willing to take the Jimmy Song bet here with you.
Okay.
But I think it's really, I think when we're going to get there, we're going to find out that maybe some of these decentralized dApps are built on things that Jimmy Song does not consider decentralized. So that's a big problem, because to reach that scale, you probably need some level of centralization for the ecosystem, and I think that's going to be an argument around this bet.
That's the catch of the bet. The bet is that it's got to be fully decentralized.
Is
dApp
EOS decentralized?
on Ethereum.
Is Ripple decentralized?
There's
is
nothing-
Stellar decentralized?
nothing in the
I
ecosystem.
highly doubt Jimmy
You've got to
Song
be careful what you say about
thinks these
Ripple
are
on the show, because
decentralized.
the Ripple bots will come for you on Twitter. Be careful.
No, I just asked the question. I didn't give the answer.
Yeah. Gentlemen, are we buying Ethereum at $250? Yes or no?
I'm buying. The reason, I must say, is because, yes, we experienced growth and even a bubble, and now the price returned almost to the price a year ago. But if you look at the ecosystem, what happens after every boom, the ecosystem is much bigger, much stronger, many more projects, many more developers. And what gives me the most belief that we're going into the right direction is seeing the people that are flowing into the ecosystem, from the development side, the research side, the economy side. So I definitely think we are going into a good place.
I'm buying the market. I don't know about Ethereum specifically. I would buy some Ethereum, some Bitcoin, some Cardano, some EOS, and others. So I'm definitely think it's a very good time to join the market, but I wouldn't take a specific choice.
Again, as I said, I'm generally bullish on Ethereum. I'm going to ask my wife if I can buy some more.
You may need to mortgage the house there.
So I'm very bullish on Ethereum, both on the technical level and the fundamental. I think that Ethereum is among, even after everything we said, Ethereum is probably among the only tokens that have fundamental value, have real utility. And just because of that, I think that it has a lot more to gain.
By the way, it's really easy to look at the utility of Ethereum. You can look at how much gas is being used every single day. It's not huge, but it still comes up to something like $40 to $60 million a year. Now, if you just assume it's stagnant, right, that means people actually need to buy $40 to $60 million worth of Ethereum just to pay the fees on the apps.
And that's what the network is not really used for.
Exactly, and that's right now when the network is very, very small. Now, we're assuming the network will grow, therefore it will eventually grow. So I think it's really a matter of when rather than if.
But if you ask me if I had to choose just one token to buy long term, I think it would be Bitcoin. I think in the end of the day, the simplicity does something very good, very well. Once you add more layers, it adds complexity. And Ethereum is doing an amazing thing. They have a very strong ecosystem and network effect, but there are competition there. I think Bitcoin is very unique in a sense. I think it can replace gold, there's digital gold, and even money, exactly.
Yeah. There's no doubt Bitcoin is still king.
So let's keep this discussion around Ethereum. I've got 4 yeses to be buying Ethereum now. Okay, so let's keep the Bitcoin discussions for the next segment of the show. But with me, I've got 4 people, all who say they're going to buy Ethereum at $250. Bitcoin took a hit after trading firmly above the key $7,000 level. The currency hit a high of just under $7,500 before a large sell-off brought the price down to $7,000. The sell-off was rumored to be linked to the 114,000 Bitcoins that were moved from the Silk Road account. With us in the studio to take a look at the Bitcoin chart is Yaniv Feldman. Yaniv, what are we looking at in the graphs?
So what we're seeing is still a continuance of the 8 months long bear market. Even though in the last months we have been seeing an uptrend, but today's price fall has broken it a little bit. I think that we are still on the rise, and we'll need to see what happens in the next few days.
So you think we have broken the bear market, or we're continuing in the bear market?
No, we're still in the bear market. We haven't broken the resistance level that needed to go outside of it, but we are seeing a pretty long uptrend we haven't been seeing in the last 8 months.
When will you be convinced that we're in bull territory again? What are you looking for in terms of price, specifically when you look at the chart?
Right now, I think that if we break the $8,000 and we sustain it for a couple of days, that will be a strong signal from the technical perspective.
This sell-off that happened today, was it Silk Road?
So there were two main rumors to what happened. One was the Silk Road wallet that was spread around a lot of exchanges being dumped. And the second was that the news about Goldman Sachs freezing their crypto trading strategy, and that affected the market. And I think it's the first, not the second. But because the market is behaving in so many ways not related to what's actually going on, I think that in the long run, we are seeing fundamental value from Bitcoin, and we are seeing the hash rate growing, and we are seeing activity around Bitcoin growing. So I think that right now we're somewhere in the end or the sideways period, and we will be starting to go up somewhere in the next few months.
I have to say, I'm hearing more and more, like, especially people who were with us at 2011, 12, 13, 14, CEOs of the old exchanges. I hear everyone talking about potentially us getting into a 2-3 year bear market. Originally, I heard that for the first time in Consensus, and I was like, no way, this is temporary. But the longer it happens, more and more people think we might be in a long-term bearish market. And these are all people who are here for the long term. They're all hodlers. They all believe eventually Bitcoin will reach 25,000 and 50,000. It's a matter of time. But we need to understand the current sentiment, both of sort of the OGs and of the retail investors. And a lot of retail investors lost money because they came in rather late, is sort of staying in the sidelines and hodling.
Yeah, but even though Warren Buffett is not a real crypto fan, he does have a true saying, when everyone are greedy, be fearful, and when everyone are fearful, be greedy.
Yeah.
And right now, we have been seeing everyone being fearful. And
I'm not sure we've seen blood on the streets yet.
Yeah, I was
That's
about
a
to
good
say
question.
that.
Where are we in the cycle is the main question. I'm
I
not
agree.
sure.
I agree.
Like in theory, if the four of us are still saying buying Ethereum, it probably means we haven't reached the bottom yet.
You haven't capitulated.
Exactly.
You haven't
That's the point.
capitulated.
So that's why it's scary that the four of us are saying buying Ethereum at 250.
And just to put things in perspective, still Bitcoin at 7,000, I had a bet with a good friend last year that if Bitcoin reaches 4,000 by the end of the year, I'm not going to work anymore. So we need to take things in perspective, and obviously I am, because I'm super passionate about this space, but I don't think there's still yet blood in the street, and I'm not a trader, and prophecy has been given to fools. We do have a strong quantitative team that is looking into this. I think that in the short term, the market will still keep going lower.
I think that there is blood on the streets. I think that we're a bit blind.
Yeah, I agree.
Meaning, the specialists and the very advanced users, they made enough money. So we go down, the market goes down, we're still comfortable. When people win, they talk about it. When they lose, they don't talk about it, usually. And I think, if you look at the graphs, then, the mass market, not the mass market, but a lot of retail investors joined in the last year. And all of them lost money, or most of them lost a lot of money. You can see that there's a 90% how do you say it? Decline in retail investors buying crypto. Now, we can sit in this studio talking about advanced stuff that those guys don't understand. It doesn't matter. We don't control the price. If they come, the price goes up. If they go, the price goes down. Right now, I think that they're leaving us. And only when real usage, which should happen in the next 6 months, because all of those ICOs, they need to come up with products. Where are the products? It's not only speculation. It can't be only speculation. If it's only speculation, then we deserve to be in a much lower place than where we are right now. But if there's real value being created, we should see it in the next 6 months, and then the people will come back.
Yeah,
there's a saying, you spoke about Warren Buffett. There's another movie, a baseball movie, that says, if you build it, they will come. We're building it, and after we will finish, they should come.
I think that's correct for Ethereum and for utility tokens to prove the ICO model for here or for there. I think for Bitcoin, most people today agree the main utility is store of value and sort of digital gold. I think that utility is here. That utility is here to stay. Highly doubtful it's going to change as a utility to something else. Now the question is, when does this utility get to a tipping point? And then we need to remember something quite interesting. So people in Venezuela, Turkey, and Argentina, for them Bitcoin still made money this year, I think, sort of roughly. But this is really eventually sort of Bitcoin or digital gold versus inflationary fiat. This is a very long play. And the more people who hold Bitcoin and want to hold some of their assets in crypto assets, and I think a lot of the people who came into the market, they haven't left. I hope they won't leave, that they will stay as hodlers and they hold that asset and understand they can now transfer it. I think that's the paradigm shift. Just people understanding I can hold my own digital financial assets. That's the paradigm shift in finance.
Yeah, but a year ago, Bitcoin was 60% of the market. It went all the way almost to 30%, and now it's back over 50. I think that the paradigm shift towards the market being more utility-centric rather than Bitcoin-centric is not that true.
I generally think we all agree that a lot of the altcoin market was overhyped and overpriced. You won't find anyone saying that it wasn't.
Bitcoin as well.
But specifically Bitcoin, there's a high chance we're probably going to see it reach those heights if more and more people use it as digital gold and digital commodity.
So I think there's two paradigm shifts, one that you just mentioned regarding Bitcoin and the one regarding the utility or security tokens, I think it's the shift between the old economy and the new economy that is much more digital. Because today we can earn a digital asset and in the end of the day sell it back to fiat to buy something in the real world. So all the e-commerce accepting cryptocurrencies, I don't see that as a great thing for the ecosystem because they transitioned directly back into fiat. But once the mindset of people is I give digital goods over the internet because this is how we communicate today and I can spend them digitally and I don't even think about fiat, that will start driving real value around the ecosystem.
Now, gentlemen, we are running out of time, but one quick question for all of you. Bitcoin at 7,000 or Ethereum at 250? Which one do you buy?
Wow, it's hard. I think right now, Bitcoin.
Moshe, Bitcoin?
I said it before, I'll buy 50-50.
You got to pick one.
I gotta pick one, probably Ethereum right now.
Yaniv, Bitcoin at 7,000 or Ethereum at 250? What are you buying?
My heart is always with Bitcoin, by opportunity with Ethereum.
Yoni?
Yeah, I'll buy Ethereum, but that doesn't mean that the price is definitely going up. So that's what I'll buy.
That's all the time we have for tonight. Let me know on Twitter if you like the new format for the show. Next week, we'll be going deep inside the Israeli blockchain scene to see whether the startup nation is living up to its top-notch high-tech expectations. Until then, I'll be on Twitter at CryptoManRun, and you should trade well, my friends.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.